I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Facebook's crypto play. The social media giant unveils a new digital currency called Libra that it hopes could be used as widely as the dollar, but skeptics are already speaking out. Plus, President Trump raises the stakes. The U.S. and China will meet at the G20 in Japan next week to relaunch trade talks after a month-long stalemate, triggering a rally in the markets. And tech companies from Amazon to Netflix are being targeted in a campaign backed by a large group of investors calling for transparency and environmental impact. Can corporations take the lead on stability? First, to our top story, Facebook unveils its forthcoming cryptocurrency, Libra. The social media giant wants you to think of it like the U.S. dollar, but a currency that you can use globally. That is, if it's successful. Libra is what's known as a stable coin, a digital currency backed by government-supported currencies and securities. It is the culmination of a year-long effort as Facebook seeks to spur growth on its various platforms that already count more than 2 billion users. Spotify, Stripe, Uber, Visa, MasterCard are among almost 30 companies supporting the project. Could this be what takes crypto into the mainstream, or will it be just another overhyped Facebook product that never quite takes off? One lawmaker already has an opinion. Senator Sherrod Brown tweeted, Facebook is already too big and too powerful and has used that power to exploit users' data without protecting their privacy. We cannot allow Facebook to run a risky new cryptocurrency out of a Swiss bank account without oversight. Joining us to weigh in on the news, Sunny Singh, Chief Commercial Officer at BitPay, as well as Bloomberg's Julie Verhage and Kurt Wagner, who covers Facebook for us. So, Kurt, let's start with what exactly is Libra and how can we use it?
Right now, you can't use it. It's actually not going to be available until the first half of 2020. But the idea is that you would take an existing physical currency that you might have, the actual U.S. dollar, you would convert it into this new digital currency called Libra, and then you could use that in much the same way that you use other money online. You could send it to a friend, you could pay for a new pair of shoes with it. The idea, more than anything, is that you can use it around the globe. And
not just in Facebook's walled garden.
Not just within Facebook and not just within the United States.
So, Julie, new payment methods often take many years to take off. Just look at Apple Pay. So let's talk about the reality of how, if and when this is launched next year, how it will actually be used initially.
Right, so Facebook's goal initially is to let me send money to someone in another country, maybe a friend that lives here. It's essentially a way to just get people using the platform and staying on it. And Facebook's big advantage here is that they already have millions of customers around the globe that it could market this to. The issue would then be is largely just regulatory with all of this in terms of depending on what they use it for, that depends on which regulator actually gets involved. So that's something they're obviously going to keep a very big eye on, especially with, as you mentioned, going into this, a lot of senators now voicing criticism and skepticism over this. And to be honest, their goal is to launch it in the first half of next year, but this thing could never get off the ground. It doesn't matter how smart your team is. If regulators give this a no, it's not ever going to become a product that you or I are using.
So, Sunny, will it? Will it get off the ground?
So I think the use case is great, but yes, regulations are definitely an issue. In Europe, they'll have to get an e-money license. In America, they'll have to get money transmissions licenses for each state. So it's definitely going to be an ongoing battle. They've got the right team, but everything moves very slowly in fintech, especially around regulations. But I think the idea of a global currency that anyone can use and access, and it's cheaper than a credit card, is great. It actually is very similar to Bitcoin. The use case is Bitcoin, but they have a 2 billion user base already to establish to go after.
The point of cryptocurrency is, decentralized, no middleman. Does it matter when it's in part backed by a publicly traded company that is called Facebook?
Yeah, so it does obviously make a little bit of a difference, but that's why they created this nonprofit group out of Europe called the Libra Association, which is actually managing it. So Facebook is just a partner, allegedly, is supposedly in this group. So they're not managing itself, they have managing members, and each person has equal membership, so to speak. So it is a nonprofit, decentralized coin they're trying to sell it as.
So, Kurt, talk to us a little bit about then how this works, because Facebook certainly has a response to the criticism from Senator Brown, especially when it comes to, well, what do they get out of it?
Yeah, and that's a good question. I think If you think that messaging and the way Julie described it, payments could be a huge business for Facebook, there's certainly, I mean, they have more than 1.5 billion users on WhatsApp and Messenger. So there's this huge audience where they could push into messaging and the idea of, you know, maybe even lending money someday, actually doing banking services. I think in the more immediate future, Facebook would say, well, the more people who have a wallet on their phone with actual currency in it that they're willing to spend, the more attractive we are as an advertising platform. So if you're, you know, Nike and you're trying to reach consumers, maybe you want to go to Facebook because the people who are seeing your ad actually have this Libra currency right there on their phone ready to, you know, spend on a new pair of shoes.
So let's take a listen to how Facebook describes the reserve, or the currency that is stored in Libra that would back up, you know, whatever you have stored in it. We spoke to David Marcus this morning, the executive who's been running this project, who also ran PayPal for many years. Take a listen to what he had to say.
The reserve is a very important component of the stability of this new digital currency, and we welcome open conversations with regulators to figure out how to drive accountability and transparency for the Libra Association, notably on the reserve.
Julie, how is the finance community receiving this idea?
I think they're a little bit mixed. It depends on who you talk to. A lot of US-based companies that I talk to don't necessarily see as big of a use case for this as someone internationally. And one thing we pointed out in the story is it's interesting to see David's former company, PayPal, partnering with them on this, as well as Visa, MasterCard, but you also have to take a step back and see who's not on that list. None of the big tech companies are on this list. Apple, Amazon, Google, all absent, and none of the big banks are on this either. In the interview David gave with us, he does say that he expects some of them to sign on by the time they launch. They have around 27 partners right now. They want to get that to 100 by next year. So I think a big component of this will be getting buy-in from big tech and big finance, which they do not have right now.
Now, Sunny, the people who are excited about this say it's like AOL for the internet. It's going to bring cryptocurrency to the masses. Is that an exaggeration?
No,
or is that truly possible?
I think it's definitely possible. And again, it's the same use case that Bitcoin has, where it's anyone can access it. It's cheaper than a credit card. It's easy. You trust your own currency outside the euro and US dollar. So it has all the right use cases, and it has the right user base to go after. In Asia, a lot of people use WeChat as their payment option. So Facebook's looking for the same option to do that. So I think they've got the right foundation. Regulations are definitely an issue. Banks will come on board because with the reserve, Facebook needs to park $10 to $100 billion. What bank's not going to want that money in their system, right? So I think the banks will all come on board, and Facebook has the power to make this happen. So we're pretty excited about it.
That said, Kurt, you've been covering social media a long time. There is a graveyard of Facebook products that have never quite gotten off the ground that sounded really great, lots of fanfare, and certainly Facebook would love to have a counter narrative to tackle the 2 years of bad news.
Right.
You know, what makes this different than any one of those other products?
I think the biggest difference is the collection of partners that they're bringing in. It's one thing for Facebook to roll something out that is Facebook specific and it doesn't work, right? That impacts Facebook only, and they can move on pretty quickly. When it involves, PayPal and Visa and Uber, there are a lot of people who have at least some skin in this game. You could argue maybe Facebook has the most, and I would say they definitely do at this point. But if they do bring on a bunch of other partners, there's going to be a lot of incentive for this thing to work, and it won't just be coming from Facebook. And I think that might be a little bit of a difference from some of the other stuff they've launched that hasn't worked out.
Now, some of the skeptics might say, well, Facebook already has so much of my information. Why should I give them my financial information as well? Julie, Facebook's also formed this other organization called Calibra, which will handle some of the privacy issues, handle the data so it can't be used in Facebook ad targeting, if you will. Well, of course, they need something like that. But how confident can we be? How much can we actually trust Facebook in the execution?
I mean, I think they know going into it that they have to make sure that there is this sort of, separate entity or way for consumers to feel like this is something that you're not going to be using my data to target me and things like that. So they're just going to have to be very careful and make sure that they talk with regulators, and there's nothing that happens that, like, the second they lose this trust and that's proven wrong, there's so little incentive for someone to come on and use this. And like we've said, Facebook has tried payments and other things before, and it's just never taken off. So this is kind of like one big last shot to make it work. And if you lose consumer trust in finance, that's a really big thing to come back from.
All right, I'm sure we'll be covering it for the next year. Julie Verhage, Kurt Wagner for Bloomberg, and Sunny Singh of BitPay. Thank you all. Meantime, Dish Network is in talks to pay at least $6 billion for assets that T-Mobile and Sprint are unloading to win regulatory approval for their $26.5 billion merger. Dish, co-founded by billionaire Charlie Ergen, had been on a short list of bidders for the assets favored by the U.S. Justice Department. T-Mobile and Sprint have already promised to sell Boost Mobile, Sprint's prepaid business, to get approval from the FCC. Coming up, President Trump tweets that he and President Xi will have an extended meeting at the G20 after a, quote, very good phone call today. Can the two leaders hash out a deal? That's next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. President Trump's top trade representative appeared before the Senate Finance Committee and continued to stress the administration's view that China is taking advantage of the United States.
In addition, we have used Section 301 to investigate unfair trade practices in China. We believe our economic relationship with China has been unbalanced and grossly unfair to American workers, farmers, ranchers, and businesses for decades.
To discuss in Washington, Bloomberg's Sarah McGregor is with us, who leads our U.S. economic policy coverage. So, Sarah, what were the highlights of what Lighthizer had to say today?
Well, I think the most interesting thing is when Donald Trump tweeted, just as Lighthizer was about to speak, about the fact that he and President Xi Jinping had spoken by phone. They had agreed to sort of break this stalemate, to have some talks at the G20. And, you know, Trump let us know that as of right now, U.S. officials and Chinese officials, after a month-long impasse, are actually trying to get a trade deal restarted again.
So what should we read from President Trump's description of this phone call with President Xi and the fact that the two sides, the United States and China, will start talking ahead of their meeting at the G20, which will, he now says, be an extended meeting?
Well, as soon as, you know, the markets heard news of Trump saying that, you know, these talks would happen at the G20 with President Xi Jinping, of course, you know, the financial markets jumped, tech, industrials. This was seen as a really good sign. But I think, you know, when you read between the lines, a White House statement later came out and said, you know, Trump really drove home the message to Xi Jinping in their phone call today that there needs to be structural changes, there needs to level the playing field between the U.S. and China. It's clear that neither side is backing down from their position. So we still find ourselves stuck between a rock and a hard place in these talks. You know, the U.S. wants China to make these reforms, adjust tech transfers, IP theft, and China, on the other hand, wants what it calls a balanced agreement. So it's also seeking to ensure that it protects its own economy and doesn't give up too many things. You know, talks really broke down when China backtracked on a commitment to codify changes into laws that would really assure the U.S. that it was going to protect IP, it was going to address some, you know, things like state subsidies. And so, you know, those issues haven't been resolved. Trump and Xi meeting simply might chart a path forward for more talks.
Meantime, you've got similar sort of mixed messages coming out of Beijing. Chinese state-run media saying President Xi is willing to meet with President Trump, willing to hear what he has to say, to exchange views. I mean, you know, certainly in the United States, there are many who aren't happy with these tariffs. They have been incredibly unpopular. How does President Trump and how does President Xi sort of walk this line between, you know, what they want to prove and what might be realistic here?
Absolutely. You said it right that these tariffs have been unpopular. Of course, Lighthizer today was testifying before the Senate Finance Committee, and many senators, you know, came out and said, well, we approach getting tough on China. The tactic of using tariffs, it just isn't working. And just down the street from where Lighthizer spoke, there was another hearing, a public hearing, on this proposed tariffs that Trump wants to put on an additional $300 billion of Chinese goods, which we know by now would hit toys and smartphones and all sorts of consumer products that have been spared so far. And these companies are basically unanimous in saying, you know, the tariffs in place have hurt us. If you put them on the rest of Chinese imports, this could be sort of, you know, the final straw for us. You know, it will raise consumer prices and cause all sorts of pain and job losses. So it's hard to imagine. You know, Trump's under extreme pressure, of course, launching his political campaign for re-election today to spare the heartland, the agricultural heartland and manufacturing. And We just don't know how much he's motivated by this, though, to get a deal with China that may fall short of some of the promises that he's made to get super tough on them.
All right, well, I know you'll be beating the drum to the G20. Thank you so much, Bloomberg's Sarah McGregor there from D.C. Coming up, calling out big tech companies, not over privacy, but their carbon footprints, why investors are saying enough is enough. That's next. And we're live streaming on Twitter. Check us out there at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Google is pledging $1 billion to tackle San Francisco's housing crisis. The tech giant will repurpose $750 million worth of its own land for residential use. The other $250 million will go to incentives for developers to build at least 5,000 affordable housing units. This will be over 10 years. The success of Silicon Valley tech companies has also massively driven up housing prices in the Bay Area. Poor and middle-income residents have been squeezed out as tech earners have snapped up real estate with new houses and apartments in short supply. Well, some big tech names like Amazon and Facebook are being called out for how they report or don't report carbon emissions. They're among 700 companies targeted in a campaign backed by a large group of investors like HSBC. The group wants greater transparency when it comes to the environmental impact of these companies. To talk about this and more when it comes to tech's carbon footprint, we've got in New York, Jesse Michael Keenan of Harvard's Graduate School of Design, who's also advised Fortune 500 companies, cities, and states on urban development and climate adaptation. And in studio, Abe Yokel of Congruent Ventures, a venture capital firm focused on sustainable housing, farming, energy, and waste management. Jesse, I want to start with you. Just how big is tech's carbon footprint? I mean, you don't normally equate them with power plants or, the makers of blue jeans, for examples, and yet they do have a giant carbon footprint, but in a different way.
Yeah, their footprint is defined by server farms, and increasingly we have seen sustainability, for instance, sourcing that power from wind in the Midwest of the United States, for instance. And there has been a big push to think in terms of sustainability, not just in terms of primary energy generation, but also in terms of carbon offsets. So I think a lot has been done, but I think, as you suggest, the next frontier is really thinking across the organization and enterprise level risk management to think about climate change and climate adaptation from primarily a risk management point of view from many perspectives.
Abe, what's your take on some new companies, their feet being held to the fire?
It depends on which new companies you're talking about, but from the tech cohort in particular, many of them are pretty forward-leaning in thinking about their sustainability and their overall impact for their shareholders, stakeholders, customers, and frankly their employees, which is a big motivating force for a lot of these companies. There's a whole host of different methodologies that you can measure by. CDP is one of them. There's over 150 different frameworks that are used. CDP is probably one of the most frequently cited, which is the Carbon Disclosure Project.
So, Jesse, then how would you rate how transparent tech companies in particular are at this moment about their carbon footprint?
Yeah, I really think it varies. There have been some who are, let's say, pick on Amazon for a second. Amazon has a arguably unsustainable model when it comes to logistics. They are largely, if a carbon tax were implemented, our Amazon Prime accounts would not have a great deal of economic parity. It would be too expensive, frankly. But then you have other companies that are really not oriented towards logistics or manufacturing or primary production and retail that I think are much better suited to engage energy efficiency and other energy technologies. So I think it really runs a gamut.
So Amazon says, in part in response to this, they've set a goal to reach 50% of all Amazon shipments with net zero carbon by 2030. But Abe, can we really rely on the companies themselves to do the right thing? Or do they need outside pressure from investors and activists?
I think they certainly need pressure. So I think there's a rising tide and trend of investor and stakeholder support in actually pushing for disclosure, for sustainability efforts, and we could list about 10 different efforts in that area. It's all caused these tech companies in general to do good things. 50% renewables is a great thing for Amazon from their power procurement. They're going to 100%. They claim that they will be disclosing their full carbon footprint, not through CDP, through their own methodology by the end of the year. So that's all net positive. I think Amazon has a unique challenge, actually, in that it is a tech company, it has server farms, but it also ships a lot of stuff. Most of the other tech companies do not, and that's a huge carbon footprint.
Right, and just as a consumer, I mean, we all get so many Amazon boxes and we don't know what to do with them.
I would
isn't that a problem?
Love to find a sustainable packaging solution to displace the cheap boxes. It's an economic problem, but we're filled with them.
Now, Jesse, this is all happening at the same time that the Trump administration is rolling back, much of the work that President Obama did on climate change. So in a way, these investors are fighting an uphill battle. Can corporations really lead on sustainability when perhaps the political winds are blowing elsewhere?
Yeah, it's not necessarily the case that corporations in the private sector has to be led by the hand by the federal government in terms of regulation and some discipline. The fact of the matter is this is good for business, thinking about not only climate change risks, but climate change opportunities. And, we talked a little bit, or was referenced a minute ago, with the climate disclosure or carbon disclosure project, rather. But, we now have the task force for climate financial disclosure, which I think gives companies a robust methodologies by sector to really think about a wide range of risk and a wide range of opportunities. So this isn't, this isn't altruism. This is about making money and the bottom line. And I think that what we're going to see in the future, and I think it's emerging now, arguably, is a greening and a browning of asset classes. And I think companies will soon fall into that one way or the other in terms of classifications.
Speaking of making money, Abe, we've got about 30 seconds left. I assume there's an investment opportunity in the companies that can help these bigger companies actually decrease their carbon footprint.
There's always an investment opportunity in things like this. So absolutely, and frankly, our investors are pushing for these kinds of changes through our investments. So the University of California is our single biggest stakeholder, and they're pushing this through us and through their own efforts. So there's a lot going on that's positive.
All right, Abe Yokel of Congruent Partners and Jesse Michael Keenan of Harvard. Thank you both. Coming up, we will continue our coverage of Facebook's announcement of its new cryptocurrency with our conversation with the man who is leading this initiative, David Marcus. We'll hear from him next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Let's return now to our top story. Facebook unveiling plans for a new cryptocurrency called Libra that will launch as soon as next year. Lots of excitement about this, but also lots of questions. Bloomberg's Joe Weisenthal spoke with Facebook's head of Calibra, David Marcus, and talked about how the cryptocurrency will be regulated.
It's the best database structure because if you want decentralized governance over something that should be governed as a public good, this is the best way to achieve this. And so we went the blockchain route because we will have, by the time we launch, 100 different global organizations that will participate in the governance of this new network and currency. 27 organizations right now. And so we needed a way to decentralize governance because no one company should control a network that basically is a protocol for value on the internet.
Let's talk about some of those launch partners. One thing that people noticed immediately is there's no other major tech companies and there's no traditional existing banks as we know them. Were they approached, or was there any particular reason for their absence?
Well, I mean, I know you want to talk about all the companies that are not here, but I think we can take a moment and
Sure.
recognize the remarkable organizations that are already joining us. And just to reestablish this is very early. 27 organizations right now, 100 by the time we launch, and by that time, I definitely expect to see banks in there. I definitely expect to see other other large technology companies. And I definitely expect to see more diversity of organizations in terms of geographical distribution and the likes. So, there's so much work ahead.
Let's talk about the structure of how the currency is used specifically. If I were to acquire Libra on an exchange, am I able to move those coins to a wallet of my own holding with my own keys like I'm able to do with, say, a currency like Bitcoin?
Yes. So while we are starting with a permissioned blockchain on the nodes side of the house, the blockchain will be open, meaning that people and companies can build services on top of the blockchain. You don't need to be a member of the association to build a wallet on top of this new network. And as a result, we will have a lot of competition for our own wallets.
But the wallet can be offline, and so it could be something in which I can hold my keys and the coins on a computer or a USB drive or a laptop that's disconnected from the network and nobody needs to know that I have it anywhere.
Yes.
And then would I be able to transfer those coins to a third party? Would I be able to send you those coins via the blockchain in a way that no entity, whether it's Facebook or any of the the launching partners, would know about? Are we able to transact in a way that no third party is able to see it?
Well, I mean, third party would be able to see it because nodes will validate transactions, and even if you transact on your own on the blockchain, the same way that other blockchains function, third parties, but no one specific party can actually see transactions. The one thing that I want to say though is, despite the fact that non-custodial wallets where you can manage your own private key and move money around will exist, the on and off ramps are going to be regulated. The custodial wallets are going to be regulated, but that doesn't mean that we shouldn't enable a form of digital cash transactions to happen on top of this new network.
Right. So the existence of a digital cash, for obvious reasons, creates all kinds of regulatory issues because, in theory, if I'm able to transact with someone in a permissionless way, then we could be doing something illegal, whether it's evading capital controls, buying drugs, whatever it is. So how do you enable that kind of free exchange while also dealing with the regulatory bodies that are going to exist in scrutinizing this project all over the world?
It's a great question, and I'm glad you asked it. So a couple of things. First of all, we've decided not to enable crypto primitives on this blockchain that would enable what we call shielded transactions. So meaning that, if you're a criminal and you want to transact on a network, this is not going to be your network of choice because accounts are pseudonymous. They're not anonymous or shielded, and as a result, law enforcement can actually do their thing the same way they're doing it with Bitcoin or Ethereum really well. Now, the one thing I would say is that the current effectiveness of anti-money laundering is, catching about, low single-digit percentage of, money laundering happening in the world. And the reason for that is that the vast majority of money laundering is actually happening in the cash system. Right. And enabling many people to join a digital network with digital money with regulated on and off ramps. So meaning that even if you want to convert fiat money into Libra, you'll have to go through regulated entities if you're moving large sums of money. And on top of that, no shielded transactions, enabling regulators to actually observe themselves what's going on the network rather than only relying on institutions to report transactions, I think will only improve the effectiveness of money laundering. And that's definitely been done with this in mind. So I think that you can have the best of both worlds, enabling people to use digital cash and be their own custodian, and at the same time not only meet the regulatory requirements, but improve on the effectiveness of money laundering programs and others.
David Marcus there, Facebook's head of Calibra, an organization that will work in tandem with the Libra Association that runs Libra, with Bloomberg's Joe Weisenthal. Meantime, we've got breaking news now about Maxine Waters, House Banking Chair. She is asking for Facebook to testify on its cryptocurrency plans and to halt any development of a new cryptocurrency until they testify and regulators get a chance to review it. This is coming from Reuters. Again, House Banking Chairwoman Maxine Waters asking Facebook to halt, according to Reuters, development of Libra until Congress and regulators get a chance to review it. Of course, we spoke about some of the skeptics, other lawmakers speaking out. This will certainly be an uphill battle for Facebook to win over regulators, as Facebook is dealing with other regulatory issues on multiple other fronts. We'll continue to cover it. Meantime, President Trump recently suggested that the U.S. should follow the example of Brussels' fantastic bureaucrats in hitting the likes of Google and Facebook with antitrust investigations and fines. Fantastic is the president's word. Bloomberg's Vonnie Quinn sat down with the CEO of Vimeo, Anjali Sud, earlier today and talked about what she is watching as antitrust investigations potentially take center stage in the tech industry.
I think for any UGC or user-generated content platform, I think it's good that there's a discourse around topics like antitrust or privacy, and clearly more scrutiny is needed. And I think for Vimeo at least, the role that we expect to play is we will continue to partner with any entity that is looking to make sure that platforms like us are operating responsibly. And so that's the tack that we're taking. I imagine Google should be taking a similar tack.
On YouTube, and I know you consider YouTube more of a partner than a competitor in many ways, but how good of a job is YouTube doing controlling inappropriate content?
Look, I think YouTube, as well as Vimeo, as well as all UGC platforms, we can all be doing a better job. I think that's quite clear, and we all, are constantly investing in things like trust and safety and what are the right guidelines. At Vimeo, we're very fortunate in that our community of creators tend to be professionals. They tend to be creatives and filmmakers and businesses, and so we don't often have the same challenges that a YouTube or a Facebook might have, but we still take that work and that responsibility very seriously, and we're constantly looking at ways to improve our processes and our guidelines to make sure that the environment for our users is safe.
I'm curious about how you think of the likes of GoPro, for example. For them, content, it didn't really work in the end, and that's what they banked on for so long. What have you learned from GoPro?
Yeah, look, I think GoPro's focus on content is actually a great example of what we're not doing. Vimeo, we really see ourselves, we're not investing in content ourselves. We're really a software as a service or SaaS company. We build the tools for any creator or small business to be able to make and distribute their videos online. And that's not on Vimeo specifically as much as it's actually everywhere, all over the internet. And so, for us, I think GoPro, the more people who are making content using a GoPro camera, that's great, but we're quite agnostic, which means we really try and integrate with any software, any camera, any way that you are trying to make and succeed with video. Vimeo is a good partner who can help you with that.
Now, Anjali, you've said in the past that the economics in this business are really fantastic. High gross margins, sticky customers, and so on. Is there a point at which you might consider spinning out?
Well, look, I think right now we see this huge market opportunity, and we have the capital and the resources in our parent company, IAC, to go after that opportunity with focus. And so right now, I am just very, interested in execution and doing all the things building all the things we want to build for our users. If the time came where we needed to consider an IPO, we certainly could and would. And again, IAC, our parent company, has a great track record of that.
Vimeo CEO Anjali Sud there with our own Vonnie Quinn. Coming up, something fishy. How Nemo could be the key to teaching your self-driving car how to manage the roads. I'm being serious. You do not want to miss this story. That is next. This is Bloomberg.
The Federal Reserve gets ready to meet and comes out with its decision on Wednesday.
It is one of the tougher news conferences I had for a chair. The market's demanding a rate cut.
Really looking forward to a great set of guests on what has become more than a routine meeting.
Alphabet investors concerned with the tech giant's handling of sexual misconduct are calling for a clawback of executive pay. This coming after reports that Google execs accused of sexual harassment got paid millions, tens of millions of dollars in exit packages. The proposal echoes boardroom discussions as companies consider Me Too-inspired policies. Well, bird brain. Maybe it's a name you taunted someone on the playground with as a child. But if it's up to Silicon Valley, that might just become a term of endearment. That is because big tech firms like Google, Apple, and Facebook are actually looking to the minds of birds, mice, and even fish to try to make breakthroughs in AI. They are hoping that seven-figure salaries will lure neuroscientists studying those animals to advance their neural networks for things like self-driving cars. You could read all about it in this week's issue of Bloomberg Business Week, courtesy of our very own Sarah McBride, who reported the story with Ashley Vance. She joins us now from Washington. Sarah, this is a fascinating story. So let's start with birds. What do technologists or tech companies like Google have to learn from the mind of a finch, let's say?
I know. It seems incredible, right? But it turns out that zebra finches have the perfect brains for technologists to study. They're complicated enough that you can actually learn interesting things about how the brain works, but they're small enough that you can really get in there and watch individual neurons fire and see how birds learn. So songbirds are among the only animals that learn to sing from their parents. They don't innately know how to chirp or grunt. So scientists, neuroscientists can look at their brain and see how they make decisions, how they learn things, and try to apply that to AI.
Now, you discovered that there's been a sort of talent rush in experts, bird experts, essentially. How did you discover this?
I know, it was so odd. When Twitter had its IPO a few years ago, I noticed that their chief engineer had studied zebra finches at Berkeley. He was making $10.3 million 10 years later while working for Twitter. So I thought, that's kind of odd. And I didn't think more of it until Elon Musk started a company, Neuralink, a brain-machine interface company. And his first hire almost was this bird brain expert from Boston University. And then I thought, wait, that's really odd. And I started Googling it and noticed that a lot of tech companies have zebrafinch scholars working for them. And then it was like a menagerie. I found neuroscientists with all kinds of obscure animal expertise tucked away in various tech companies in Silicon Valley.
So let's talk about mice and fish. What do they have to teach technologists?
Well, one of the more incredible things I saw while doing the reporting for this story was a little tiny mouse paw on a tiny joystick playing a video game, Atari style. And this is something that scientists at Harvard are doing. And they have these mice rigged up so that their neurons fire different colors when they're playing these video games, and then they watch them, they change the route, see if the mice kind of fall off these virtual tracks, and learn a lot of things that might play into, say, how a self-driving car might make a decision. Zebra fish, tiny little fish larvae, are ideal because when they're babies, their heads are transparent. So you don't even need to do anything particularly fancy to look inside their brains. You just give them a special benign virus so that their neurons light up when they fire, and you can watch their neurons firing away just through a microscope. It's pretty incredible.
So interesting. So are there enough bird, mice, and fish scholars to go around for big tech, which is hungry for talent?
Yeah, I mean, it's fascinating because these used to be pretty obscure degrees. There were just a handful of PhDs, a few hundred each year. Now that's kind of trebled. There are thousands of undergraduates in neuroscience now. And you understand why. If you're a postdoc researcher in academia, you might be making $50,000 a year. If you're working for a Silicon Valley company, you're probably making at least $200,000 a year. So some academic institutions are getting pretty angry that big tech keeps snapping up all their top grads. I spoke to one student who was the advisee of the professor who left to go to Neuralink, who transferred after that happened. And as soon as he transferred to Berkeley, his second advisor quit to work for a startup. So there's a lot of holes in academia, but there are a lot of students coming up the ranks to try to fill them.
Wow, and some drama too, it sounds like. Fascinating piece, Sarah. Check it out.
Thanks.
In this week's edition of Bloomberg Business Week. Sarah McBride there. You can hear from more of the magazine's editors and reporters every Saturday and Sunday on Business Week on Bloomberg Television. Still ahead, imagine being able to communicate without cell, Wi-Fi, or even satellite service. We will talk to the CEO of Gotenna, who's making that possible, next. Adobe shares rising in extended trading after the company announced better than expected earnings results for the second quarter. The software company reported revenue of $2.74 billion, a 25% increase over the same period last year. Mobile communication startup Gotenna was created after Hurricane Sandy years ago, but today is marking a new chapter. The company raised $24 million in its latest funding round to help people connect off the grid on its mobile mesh network. This has all happened with CEO Daniela Perdomo at the helm. It's even more impressive knowing that among 257 mobile communications companies started in the last 5 years, only 3 were founded by women. Daniela joins us now from New York. So Daniela, let's first talk about the technology. How does this work?
Sure. So we basically leverage the phones that we have on us all the time and unlock their ability to communicate on a peer-to-peer basis with these devices that enable peer-to-peer communication. So we essentially are taking this mobile infrastructure that's around us all the time already and unlocking their ability to function without the use of centralized connectivity, be that Wi-Fi, satellite, or the internet.
Now, we've all had this problem, but you started out focusing on consumers and then pivoted to focusing on the military and first responders. Obviously, hugely important that they stay connected. How big of a market is that for you?
Yeah, that's a great question. So it's a $26 billion a year opportunity, which should come as little surprise given how important it is for people who put their lives on the line for others to have a lifeline both to each other and back to central command. And we're really proud that our technology is being used to allow these people to command and control their missions more efficiently and get home safely.
So how much money are you making and can you make off of this technology?
So, you know, our average contract within the public sector is a multi-million-dollar contract, and 70% of our customers also subscribe to software on top of that. We think the opportunity is really big. We are really innovating in a space where, you know, these customers are used to paying a ton of money for technology that's not upgradable, and we're turning that on its head. And instead, you know, we see the opportunity to have a volume business where every single soldier in the battlefield, every single wildland firefighter out west, you know, is enabling communication between their peers so they can do their job more safely. And so we have innovated not just in creating these incredible mesh networks, but also on the price. And so the average unit that we sell is about $800. But you know, if you're selling multi-million-dollar contracts, you can tell that's quite a lot of units.
Now, it's no secret that women are underrepresented in tech, underrepresented in entrepreneurship, and founders like yourself run into many challenges when trying to raise money in a male-dominated venture capital community. But what is lesser known is that women who start companies that are not focused on women things, like, let's say, fashion or e-commerce or beauty, have it even tougher. How have you overcome the challenges of raising money in a Silicon Valley community when you're focused on the military, when you're focused on a more sort of gender-neutral pursuit, let's say?
Yeah, I think that our technology is exceptional. Again, it helps people in the most high-stakes situations, in life or death situations. And I think that the reason we've been able to succeed in spite of these additive biases in Silicon Valley is precisely because the technology is so game-changing. And it has also not just applications in the public sector, but if you believe in a future where billions of things need to be connected to one another at all times, you're going to need a network topology that's mobile and low power, low cost that's going to actually make that happen. And we believe that Gotenna will be that underlying communication stack for myriad applications, including emerging markets and mass market use cases.
All right. Well, go get them. Gotenna CEO Daniela Perdomo, thanks so much for joining us.
Thank you.
We'll be following your progress. We should note that Bloomberg Beta, the venture capital arm of Bloomberg LP, is an investor in Gotenna. And that does it for this edition of Bloomberg Technology. On Wednesday's show, we're going to bring you a one-on-one interview with Facebook COO Sheryl Sandberg from the Cannes Lion Festival. And of course, we are always live streaming on Twitter. Check us out there at Technology. Follow our Global Breaking News Network TikTok on Twitter. This is Bloomberg.